Well, hi, everybody. I'm Rick Edelman. Thanks so much for joining us on this program today. This is not something we thought we would be presenting a month or two ago, but developments change pretty quick in the field of crypto. And when they do, we want to be as responsive as possible. So we're going to present to you today, I think it's the most timely topic in the field of crypto today, and I think certainly the most important and fundamental. We're calling this, Are You Ready for a Bitcoin ETF? I think that speaks volumes that you need to get ready. And we're going to explain why today. And to help us figure it all out and understand what's going on, how we got where we are, and what is likely to be coming next, I'm happy to bring on my good friend, Matt Hougan. Matt is the Chief Investment Officer of Bitwise Asset Management. Always great to be with you, Matt. How are you?
I'm doing great. Glad to be here, Rick.
We're going to spend a lot of time talking about what's going on with the latest Bitcoin ETF applications. As a prelude to that, Matt is one of the leading experts in the field of crypto after a several decade career in the world of ETFs. So that makes today's conversation absolutely perfect, the total merging and blending of crypto and ETFs. So Matt, you're perfectly positioned for that. You have written the CFA Institute's Guide to Cryptocurrency, and you're a columnist for Forbes, and of course you built Inside ETFs and ETFs.com, the largest ETF conference in the industry. So really glad that you're here for this conversation. Some folks, though, Matt, may not be as familiar with Bitwise, so tell us a little bit about that.
Sure. Great to be here. I am ready for a spot Bitcoin ETF, by the way, Rick, just to answer that question off the top. Bitwise is a specialist crypto asset manager. We've been around since 2017 through bull and bear markets. We exist to serve professional investors, mostly financial advisors, RIAs, family offices, and we do that but through a variety of products. We're best known for having created the first and today running the world's largest crypto index fund, the Bitwise 10, but we have crypto equity ETFs, we have private placements, we have SMAs. The goal of Bitwise is to help professional investors access the opportunities in crypto in whatever package and whatever strategy makes the most sense for them. And that's what we've been doing since 2017.
And really, you are product agnostic. You don't really care what the format is or the way that advisors want to run money. However you want to run money, there's a methodology that Bitwise makes available. And I think that's one of the things that makes Bitwise unique in the marketplace. There's something else you do, Matt, at Bitwise that I think is worth noting, and that is the fact that you provide such a strong level of support to advisors. You've built a network that is unlike anybody else in the field.
That's right. I appreciate you raising that, Rick. Yeah, we have a team of ETF distribution experts in every territory in the country. They've all gone through your educational course as well, Rick. So they are trained up through DAC-FP to be experts in the field, and they exist to help financial advisors help clients. Look, we at Bitwise recognize that even if you add crypto to a portfolio, it's going to be a small percentage of your client assets, maybe 1%, maybe 2%, maybe 5% if you're at the edge. It can't take up 90% of your time following this space. So we have consultants in your area that if you get a call from a client about whatever's happening in the crypto market, you have someone you can reach out to who you know, who's been in your office, who can answer that question or tap into Bitwise's research team to get you an expert answer and make you an expert to your clientele. That's why we built this team. You can click that link and find the representative in your area of the market. I think it's unmatched in the industry. We're really proud about it.
And in fact, we're going to take that link that you see on your screen and put it into the chat and the Q&A boxes so that you can actively click that URL and find out which of these smiling faces are in your geographic area. So we will put that up. In fact, I think it's already up there right now. So with that as a basis of this, let's talk about what has just happened, because something crazy has just occurred. In fact, the media has been running stories today, Matt, and I'm sure you've seen a couple of them, where they quote me out of date, which is really interesting. The story is that we have all regarded, in the crypto community, the fact that a Bitcoin ETF is the holy grail of crypto. And we've largely had this attitude because all the surveys, in fact, the Bitwise survey, advisor survey that you do every year has said this consistently, Matt, over the years. Advisors make it clear that they want a Bitcoin ETF, that they're not going to invest in crypto until they have that. And it's pretty obvious why advisors have that opinion. We use ETFs more than any other platform. That's the way we like to run money more than anything else. And we all know why. I mean, you more than anybody, Matt, understand the benefits of ETFs: low cost, transparent, highly liquid. They trade all day long, just like stocks in terms of pricing. What's not to love? And this is why there's been such a movement out of mutual funds and into ETFs over the past decade. But there hasn't been a Bitcoin ETF. And a lot of companies have tried, including Bitwise. How many times over the last decade has Bitwise filed an application to create an ETF?
That's exactly right. We've gone through the whole process twice. And so we're hopeful that the third time is the charm, Rick.
And so it's been very frustrating, right? That each time you do this, and I think all told, it's like 40 or 50 applications by a dozen companies have been filed over the last decade, and the SEC has rejected every one of those applications. It got to the point that earlier this year, Matt, you and I were talking, and you said, tell me if I'm misquoting you here, that this was back in January, February, and you said, we're done filing applications. It's not, there's no point. The SEC is not going to say yes under Gary Gensler. We're not going to waste our time anymore. Is that a relatively accurate quote?
Yeah, we believed at the time we had done a great deal of work in our last application trying to answer the SEC's questions. We submitted over 200 pages of academic research. And at the time, we just didn't see a pathway forward. We didn't know what extra research we could provide. And so, yeah, we had taken a step back from the market and said we were going to monitor the entirety of the situation. And we're not going to refile immediately at that time. And I didn't see a window to when we would refile either at that time.
And you're not alone in that viewpoint. Everybody pretty much reached the same conclusion. A lot of companies that had filed pulled their filings off the market and said to the SEC, never mind, in the face of Gary Gensler's opposition. Well, then in the middle of June, along comes BlackRock. Out of the blue, it seemed. No prior notice I was aware of, no conjecture. BlackRock filed for a spot Bitcoin ETF application. Surprising, I think, everybody. And there was a lot of speculation as to why they did that. We're going to talk about that in a bit. You immediately, I think it took you a day for Bitwise to say, new world, new situation, we're getting back in the game, all right? It was within 24 hours you filed your application. Is that right?
That's exactly right. Yep, within 24 hours.
And others have since followed suit. There are now 10 applications: ARK, Fidelity, Global X, Invesco, Valkyrie, Van Eck, WisdomTree, and of course Grayscale, which is in the middle of their lawsuit with the SEC trying to convert GBTC into an ETF. All told, 10 companies have now jumped back into the pool, all vying for approval from the SEC. So the first question I've got to ask you, Matt, is what happened? Why did BlackRock do this? Why now? And why did it cause Bitwise and everybody else to pile on as well?
Yeah, I'd love to answer that. I first should throw out two important disclaimers. One, of course, I have no direct insight into what BlackRock's decision-making was beyond seeing what they filed. I'm not in the BlackRock boardroom. We have no commercial relationship with them. So I'm acting as an ETF observer and a knowledgeable expert in this space, trying to interpret what they're doing. I also can't speak specifically to the Bitwise filing beyond what's filed with the SEC. So I'm going to put on my ETF hat and talk generally about this. You know, BlackRock, of course, is the largest, the most established, arguably the most sophisticated ETF company in the world. They run iShares. They run the largest share of money. iShares basically built this business alongside State Street and Vanguard. And so they have a huge amount of expertise. And when they bark, you have to listen. So one element of why all of the filers, I think, lined up quickly to follow suit was simply that BlackRock doesn't joke around. And if they think the market is ready for a spot Bitcoin ETF and that there is a pathway to approval, you have to recheck all of your work that got you to an opposite conclusion. And so I do think that that was sort of a clarion call that said, let's look at this again. Let's look at each of our data points, look at these new ideas and see, could the SEC view this as now getting over the line? And I think a lot of people did that and decided it was time to march forward. The other piece of it was that this BlackRock application had a novel edge to it, which was a proposed surveillance sharing agreement between the listing exchange for the ETF and Coinbase, as it turned out. At the time, I believe it was unnamed, subsequently named. And that was meant to abet and assuage the SEC's primary but not only concern, which is the ability to surveil the Bitcoin market for potential manipulation. That has been the reef on which so many spot Bitcoin ETF ships have crashed over the years, is the SEC wants the ability to surveil the underlying market to make sure that there is no opportunity for gross market manipulation. And this surveillance sharing agreement was a novel idea that BlackRock had put forward. So that caused everyone to relook, and a lot of people decided, well, we should get in line. There is an opportunity here. No guarantee we'll get to the finish line, but there is a chance. And I think that's what happened.
I think there are two other things worth talking about here. One of them is that Larry Fink has very recently changed his mind, or at least his public statements, about Bitcoin and crypto. Back in 2017, we all remember that he famously said Bitcoin is pretty much only for money laundering. And that was a typically negative comment about crypto way back when. A month ago, he went on CNBC and he said that he now feels that crypto is going to transcend any one currency. He said that, and I'm going to quote here from what he said on CNBC. He said, quote, "We believe we have a responsibility to democratize investing. Over the last 5 years, more and more global investors are asking us about the role of crypto. And like I said, I do think a lot of crypto is an international asset. More importantly, because it's so international, it's going to transcend any one currency in currency valuation." And he thinks an international crypto product can transcend the problem of dollar devaluation, meaning inflation. Pretty powerful statement coming from the CEO of the world's largest money manager. And with that kind of an attitude, when he says, I believe in crypto and we don't have a crypto offering for our clients, we therefore need to create one, bam, you get a spot Bitcoin ETF application for my shares.
Yeah.
So that's pretty powerful.
Yep, I agree. Really remarkable to see the world's largest asset manager take that stance. I think it's a great point.
But it raises another really interesting aspect, which is why now did Larry Fink reach this conclusion, and why now would they file the application in the face of the pessimism that you and everybody else in the crypto community has faced regarding the SEC's attitude about these applications? So there's a speculative nature of this. And I want you to tell me, and I'm going to put you on the spot in the world of speculation, because you know how worthless speculation is, but I'm going to do it to you anyway, Matt. Some people are speculating that there's been a backroom nudge, nudge, wink, wink conversation between the SEC and BlackRock, that Gary Gensler has boxed himself into a corner. He has been unable to legitimize or justify his opposition to crypto. He's getting criticism in Congress. There's even a bill in Congress to fire him. He has lost the Ripple court ruling. Many feel he's going to lose the Grayscale lawsuit. And he is finding that he doesn't have much of a choice but to say yes to these crypto ETF, Bitcoin ETF applications. But he doesn't want to admit that he's wrong. He doesn't want to admit that he's lost. So with a, an elbow, nudge, nudge, wink, wink out of Monty Python, he goes to BlackRock and says, fellas, if you submit an application, nudge, nudge, wink, wink, we'll say yes to you. We didn't want to say yes to anybody else, but we'll say yes to you. You think that kind of a backdoor conversation in today's regulatory environment is even possible?
I love a good conspiracy theory as much as anyone, Rick, but the short answer is no. I don't think BlackRock had any inside information. I think the SEC, acts fairly and honorably in these situations, and I don't think they're making those sorts of political judgments. I'd paint a different picture. Let me paint a different field for you, an outsider feel that maybe describes how this could have come about. One little known fact is that BlackRock has been edging towards crypto for a number of years, right? They added the ability to add exposure to Bitcoin futures in their global OWL product. They built Bitcoin functionality into Aladdin. They haven't been no on crypto. They've been walking, and they just started to run. So I think that's one element that's maybe underappreciated by the public. BlackRock didn't wake up one day and go from 0 to 100. They maybe went from 30 to 60, but they had taken them a while getting to 30. The other thing that's worth noting is BlackRock is new to this race. Maybe those of us who have been in this race for a while are beaten down after 10 years of not getting across the finish line. And you could argue that from a new perspective, without that legacy, you would look at this SEC differently. You would look at this current iteration of the SEC and say, it's the first time they've allowed any crypto ETFs, because of course they approved a Bitcoin futures ETF close to 2 years ago. They then allowed a 2x Bitcoin futures ETF to go effective. We've seen those ETFs trade well for close to 2 years. We've seen the trading volume on the CME, a regulated futures market, grow significantly in comparison to the unregulated markets. And of course, we have these exogenous events like the Grayscale lawsuit, which may be clarifying what is and isn't allowable as you review these applications. I think it's reasonable that you could imagine a rising tide of interest in Bitcoin at BlackRock, and then looking at this SEC that has allowed futures-based ETFs to trade, did allow futures-based mutual funds to exist, open the door a little bit to crypto ETFs and say, maybe there is an opportunity here. Maybe within the next 240 days, this SEC might be ready to approve a spot Bitcoin ETF. I think that's far more likely than any sort of backroom deal. I just don't think that's how things work, although I understand how Twitter can imagine that by seeing what happened in the market.
And I like your analysis of it a whole lot better than the speculative notion, because it's a little too silly to contemplate, but it's out there too often and worthy of conversation. Let me add one other element to this, and that is the fact that the SEC hasn't just said no over the last 10 years. Each time they've said no, they've explained why they've said no. And way back in the earliest, it was because of the rampant fraud and abuse and offshore accounts. And where do you custody? How do we have any confidence in custody? And then they were concerned about pricing, because Bitcoin's price is not the same everywhere at all times, because different organizations price it differently at any given moment, creating an arbitrage play. And over the years, you at Bitwise have been able to demonstrate, along with others, solutions to those concerns that the SEC has raised. And that led to the most recent issue, and that's the surveillance, which you did mention briefly, but I want you to elaborate on it, Matt, because this is a major change in the nature of these applications. This, I think, more than anything else, made BlackRock's application different from any previous application. So elaborate on what this really means and why it is potentially a game changer.
Yeah, maybe I should take a step back and explain sort of why it matters in the first place, which is for spot commodity ETFs. The SEC has always insisted that there be an ability to surveil a related market to give confidence that there is not manipulation. To make that specific, Rick, when they approved the spot gold ETF, GLD, spot gold is not a regulated market, right? You can buy it on 47th Street from a shady dude in a trench coat. It's not a regulated market. But in approving the spot gold ETF, the SEC noted that the COMEX gold futures market was a large regulated market, and that an exchange could surveil that market and by proxy have surveillance over the spot market. And the same has been true for platinum, palladium, silver, and other spot commodities. So as in regards to Bitcoin, the SEC has insisted there needs to be a, quote, regulated market of significant size that you can surveil to ensure that there's not some funny business going on with the spot market of Bitcoin. If you look at Bitwise's past two applications, we've taken 2 shots on goal to try to establish that that market exists. We used, of course, the CME Bitcoin futures market. In our first example, we said, hey, the CME Bitcoin futures market is pretty large. It trades at the time about $100 million a day, and it's a large market. And the SEC said relative size is not enough. You need to show that the CME leads the spot market so that if you surveil the one that's leading, you'll have proxy surveillance over the spot market. And so our second application, we tried to do just that. We used relatively sophisticated math to show in most instances, the CME is the leading source of price discovery. And the SEC responded with detailed questions about how certain that is. And what about a mixed academic track record? So have you really shown that it's significant? So for a long time, people have focused on this idea of demonstrating that the CME is a regulated market of significant size that you can surveil because you need one to surveil. What's novel about the BlackRock application is that they took that a level down. What if we could provide a surveillance sharing agreement between the exchange that's listing the ETF and Coinbase itself? Could that give us the confidence that the market will be fair and not overly manipulated, such that an investor in the ETP can be confident they're getting exposure to a fair market? I do think it's important to note, it doesn't necessarily solve the exact letter of that wording. It's not a regulated market, of course. Coinbase is not regulated at the same standard as the NYSE. But I think the argument is, let's look at the totality of the circumstance. Let's look at the development of the CME market that you can surveil. Let's look at its increasing importance. And then let's add these other benefits, like the ability to surveil these spot markets. And in aggregate, does this give US investors confidence in the Bitcoin market such that you can have an ETF that you can trust? And that's what's the novel. It's this additive push. I think it's important because a lot of people in the media talk about it as this silver bullet. Like, oh, BlackRock figured out the one thing you need. I don't think that's true. I think it's a totality of circumstance. But the totality of circumstance with this SSA looks pretty interesting. And I think could give people a lot of hope that maybe this gets over the finish line.
And I think part of the reason there is that optimism is that when the SEC reviewed a lot of these new applications, they said you aren't specific enough. You didn't define exactly how you're going to do this SSA function and who you're going to do it with. And everybody refiled, naming specifically their partner in this effort. And it was at that point that the SEC, okay, we now have what we're looking for, and we're going to start the clock on our evaluation. So I think that that was a pretty important move. And I think it does facilitate some level of optimism that this time might be different.
Fingers crossed. We're working on it.
So tell me about your thoughts on timing. I mean, officially, the SEC has 45 days. That's kind of nonsense because they can then extend it another 240, which it looks like they're going to do across the board. Do you think that, what timeline do you think we can expect to receive before, in order to get the SEC's verdict? And second, do you think that the SEC is likely to say yes to everybody all at the same time, or no to everybody all at the same time, or will they do them one at a time?
Oh man, these are a billion-dollar question.
Yeah.
But you're exactly right. So you'll see reporting in the media about interim deadlines. I believe ARK has the next deadline. I think it's August 13th. But you'll even see, yesterday I saw Cathie Wood,
right,
the CEO of ARK, said the SEC is likely to push that back. Those interim deadlines are just what they sound. The SEC has the ability to extend their review up to 240 days from the publication in the Federal Register. So I believe that pushes the ARK filings review into early January. And the other group, the other cohort around BlackRock and Bitwise, et cetera, into March if they take the full time. But they have the ability to review them beforehand. And that's where your question of will they do them in order? Will they do them all at once? And the answer is no one knows. I will add two things on it. If you look at the history of the SEC's review of competing ETF applications, you can find instances of whatever you're looking for. You can find instances of where they advanced one application because they had done the most work and they approved it ahead of the others. That was the case from my reading of the circumstance in gold with GLD, where GLD actually wasn't calendared first, but they had done most of the work. And so they got approved first, which I think is great. You can see instances where they lined up all the competing applications and approved them at the same time. That was the instance you might remember, Rick, with non-transparent active ETFs, which also took 10 plus years of review before the SEC gained confidence that those could go live on the market. And they approved multiple systems at the same time. So it could go any which way. From my perspective, what would be best for the investing public is if we got more than one high quality ETFs approved at the same time so that we can get the most cost competition, the most quality competition, and the most choice out there. I don't know if we will or need to get 9 or 10 or 20 ETFs all at once. But I do think that would be a great outcome for the American public. Of course, we don't know, and we will find out what happens from here. And I'm hopeful that Bitwise will be part of the crew if a crew gets to go forward.
So give me your speculation. What is the soonest you think the SEC decision is going to come?
Yeah, I don't know. I mean, what we've said publicly is I would look in Q4, early Q1, just because of that's when the calendar times out. But it could come at any point. I know that's frustrating for people, but that's one way to answer it. I would look in late Q4, early Q1 as the most likely window. But we're talking probabilities here, Rick. It could be any time.
So let me ask you this then. The question then becomes, well, I'm going to preface it with a different question. I want you to handicap this, Matt. What are the odds that the SEC says yes to at least one?
I think there's no guarantees, but we're optimistic that we are in the final phase towards getting a spot Bitcoin ETF.
So better than 50%.
Yes.
Okay. Having said that, what if the SEC says no? And in that context, what I mean is we know that when BlackRock's application was filed, Bitcoin's price rose almost 25%, almost immediately, on the enthusiasm that the existence of the Bitcoin ETF would bring a lot of new advisors into the marketplace and their investor dollars. It would add tens of billions of dollars, or hundreds of millions for sure, into the market. It would probably increase institutional activity as well. And since it's a fixed supply, the increased money would cause the price of Bitcoin to rise. That's assuming the SEC says yes. And the market has already kind of adjusted for that with a 20-25% price increase since BlackRock's application. What do you think the price is going to be if the SEC says yes? What will happen to the price? And what do you think will happen to the price if the SEC says no?
Yeah, it's a great question. Let me take the second one first, Rick, if that's okay.
Sure.
My base case is we're going to have a spot Bitcoin ETF in the US at some point in the near future. They're trading well in Canada, in Germany, in Scandinavia, in Brazil. I think it's established that you can have one, and I think we will get one here in the US as well. So even if this current batch didn't garner approval, I don't think we'd be kicking the can infinitely down the road, and therefore I don't think it'd be a huge setback to Bitcoin or crypto. There may be some disappointment, a little bit of reset, but as long as it's somewhat close ahead of us and we have confidence that we will get there, I think investors can wait for that impact. In terms of what will happen if a spot Bitcoin ETF is approved, my honest expectation is there's an opportunity for a sell the news event when it launches. I mean, I think the long-term price impact is positive and significant. We suspect there will be significant inflows into a spot Bitcoin ETF over time. But if you look at the history of novel ETF approvals, it takes multiple years for them fully to get up to speed, right? GLD didn't have its largest annual inflow, I think, until about year 10 or 12 or 15. It certainly takes 3 or 4 or 5 years to get fully up to speed. So I suspect it's a long-term bullish catalyst, but I don't suspect you'll see jagged trading around a Bitcoin ETF approval or rejection. I think it's a longer-term theme than that.
So what should advisors be doing as a result of this entire situation? Do we wait for the news to occur, wait to see what the SEC says, and then make a decision? Or do we tell clients to invest in Bitcoin today in the vehicles that do currently exist, including the many from Bitwise, to buy now while prices are relatively low, on the attitude that the ETF will cause ultimately prices to go higher? So do we buy now in a more cumbersome, different way, or do we wait?
Great question. You know, the best time to buy Bitcoin was when it was trading below $1 and no one thought it was worth anything. But of course, at that point, the risks were enormous. There were technology risks, there were criminal risks, there were legal risks, there were custody risks, there were trading risks. It was virtually impossible to access. The price has now gone from $1 to 30,000. Those risks have been diminished. You can now custody at Fidelity. Now BlackRock is filing for a spot Bitcoin ETF. Now we're getting closer to regulatory certainty and clarity in the space. My point in saying that is that every investor has to decide how much risk they want to take on, and risk is directly linked to potential return. There is more risk in Bitcoin before a spot Bitcoin ETF is approved in the US than after a spot Bitcoin ETF is approved in the US, because it's a regulatory stamp of approval, it provides increased regulatory clarity, and it makes it easier for investors to access it safely. So some investors may want to take that risk in the hopes that they're rewarded. Other investors, that risk will be too much for them and they should wait, or maybe they never need exposure at all. It's just a matter of risk and return. But this is a big reduction in risk if we get a spot Bitcoin ETF approval in terms of Bitcoin's long-term trajectory. And so you would expect there to be a return opportunity for those who are willing to bear that risk. That's the closest I can come to helping people think about this.
Yeah, I like that response. And I would argue that now, before any of this happens, is the time to start having conversations with clients. You don't want to wait for the news to come out, because it'll be page one news when it hits. And you're going to get phone calls from clients asking about it. And you'll look flat-footed if you have the same reaction, gee, I didn't know this was coming, because they don't know it's coming. They're not paying attention. So talking to them now and letting them know, this is what's going on in the marketplace. We're not sure how it'll turn out. Here's how I think it might turn out. Here's, more importantly, what I think you ought to do about it, whether that means buying now or not. But I think that this is a wonderful opportunity to have a conversation with clients about a topic that you may not yet have had with them, that they may be very welcome that you did bring it up. Your clients, chances are you have more of your clients who own Bitcoin today and you don't even know it. And this is an opportunity that could be created for them to own Bitcoin in a much more convenient, familiar package than they're able to at the moment.
I think that's a great point. And I think it speaks to maybe something even bigger, which is that, like, the old shibboleth of being able to avoid it, ignore it, and assume it's going to go away, that is completely outmoded now. As you mentioned, once a spot Bitcoin ETF is approved, you have to be ready to have that conversation. I would argue, with the world's largest asset manager talking about this transcending national currency, that idea that you can just ostrich and stick your head in the sand and avoid it is passé. I think advisors should be having conversations with clients. They don't need to allocate. but they do need to be informed and ability to have that discussion. And if they do want to allocate, as you mentioned, there are tools available now in ETF wrappers, in SMA formats, in private funds, in individual equities that can get them close to the exposure they're looking for ahead of time. So it is time to have that conversation.
And we list all of those investment opportunities at our website, dacfp.com, at our yellow pages, which is a free listing that provides you a list of all the different investment opportunities that are available. And you can get that at dacfp.com. We'll throw that link into the Q&A and chat as well. We have a lot of questions here, Matt, from folks that I want to bring to your attention. If you have a question, haven't posted it yet, do so in the Q&A box. My last question for you, Matt, is this. Before we jump to some of the audience questions, we're so far talking about this as though this is all that matters. I mentioned earlier, this is the holy grail of crypto, that everybody has been just anxiously awaiting this for years and years. 77% of advisors surveyed say the Bitcoin ETF is what they're waiting for to engage in crypto for their clients. But is it really the holy grail of crypto? I mean, let's assume the SEC says yes, and let's assume that investors buy it. Let's assume that advisors recommend it. There's a lot more to crypto than just Bitcoin.
I think that's exactly right. You know, you call it the holy grail. I call it the Moby Dick of Bitcoin. It's something we have to slay to get past to move on with the rest of our lives. There's so much more to crypto. There's more to crypto than just Bitcoin. One of the most exciting things that are happening in crypto right now is what's happening in the Ethereum ecosystem, where we think we're on the cusp of truly mainstream adoption of everything from NFTs to DeFi to other applications in that space. There's an explosion of real world use cases. And so investors should be thinking, not just getting exposure to Bitcoin, but getting exposure to other assets within crypto, to companies that are building on crypto. Just 2 days ago, maybe yesterday, I don't remember, time blurs, PayPal announced it was launching its own stablecoin.
Yesterday.
That is another example of how you can gain exposure. Companies that recognize where the puck is going and are skating there from the traditional financial world are going to have a leg up. So yes, there is much more to crypto than just Bitcoin. There's more to Bitcoin even than just a spot ETF. There's a lot going on in this ecosystem.
And so, and to that point, in fact, Bitwise has just filed an application with the SEC, not for a Bitcoin ETF, which you've already done, but now for an Ethereum ETF. So I know you can't comment on the application directly, but talk about just the notion of, you know, of that from a bigger picture perspective, because that's fascinating.
Absolutely. Yeah. As you mentioned, I can't speak about the filing specifically, except for to note that it's an Ethereum futures ETF, which would invest, if allowed, in the futures on the CME. The idea or what we're seeing in the ecosystem, again, I can't emphasize this enough, is the ETF logjam breaking up. I know there is a caustic way to view what's been happening at the SEC, but there is a less caustic way of viewing it as well, which is that we got a crypto equity ETF with the word crypto in the name. We got a Bitcoin futures ETF. We got a 2x Bitcoin futures ETF. Now there are multiple Ethereum futures ETFs filing that are moving through the system. There are filings for blended Bitcoin and Ethereum futures exposure. This market is opening up at an accelerating pace, and investors are getting what they want, which are ETF tools to access the exciting things going on in crypto. And these latest Ethereum filings, I think, fit firmly into that framework, and they're an exciting thing to note. And we can hope down the road we get spot ETFs and we get index-based ETFs, and all of those things I think are coming long term for US investors. And it's just a matter of walking down that road and clicking off the mileposts one by one.
So we've got a bunch of questions and they're still coming in. A couple of them right off the bat from Steve and from John are asking related questions. First, if I own BITW and BITQ, I'm going to want you, Matt, to tell everybody what those are.
Yeah.
If I own those two funds, do I need to also own a Bitcoin ETF?
Sure, absolutely. Great question. BITQ is the Bitwise Crypto Innovators 30 ETF. It holds a largely pure play exposure to companies that are building in the crypto ecosystem. So crypto miners, companies like Coinbase, MicroStrategy, Galaxy, etc. And it has exposure in the way that gold miners might to gold. This fund has that type of exposure to crypto itself. BITW is an OTCQX traded trust that represents an interest in the Bitwise 10 crypto index fund, which is the diversified index of Bitcoin, Ethereum, Solana, Cardano, and the other 10 investable large cap assets. It, of course, can trade at premiums and discounts as an OTCQX traded trust, unlike the ETF network. I think what the questioner is asking is, do those two funds give solid exposure to the crypto space? And I think the rough answer is yes, they do. Both are highly correlated to the returns of the crypto market itself. Different investors may want different specific exposure. If you wanted to amp up your Bitcoin exposure specifically, because you were excited about an asset that's attempting to become a digital version of gold and may provide a hedge against currency debasement and other tools that are unique to Bitcoin, then a Bitcoin ETF would be a great solution. But with those two funds, you do have generalized exposure to the opportunities happening in crypto. And so that's an effective portfolio to gain that exposure as it exists.
So a Bitcoin ETF is 100% Bitcoin. BITW is what, 40%, 50% Bitcoin?
North of that, but yeah, it's partially Bitcoin.
So you're getting Bitcoin plus 9 others, as opposed to just Bitcoin. So there would be your choices. And that's the related second question from John. BITW is currently trading at a discount to its NAV. So what is the future for BITW? Is that got any potential for conversion to an ETF status?
Yeah, great question. It's important for investors to recognize that these trusts can trade at premiums and discounts, and that Bitwise has no control over those premiums and discounts. We've stated publicly that we intend to convert BITW to an ETF at such a point that that is allowed, but there is no time frame that we are on to do that, and we don't have clarity on when or if that will be allowed in the future. So that is our long-term goal. We're committed to that, but we don't have a specific time frame or guarantee on exactly when that will occur, Rick.
And I have to assume part of the reason for that is that look at the struggle to get a Bitcoin ETF. You've now filed for an Ethereum futures ETF. Those other 8 coins have never even been contemplated as a separate ETF by the SEC. So I don't see how you could have a basket of them before you have individuals. So I got to believe it's a while.
That's right. That's fair.
Here's a really interesting question, and this is about as fundamental as it gets. Where would these spot Bitcoin ETFs get their Bitcoin from?
Great question. And there's two layers of answering that. The short answer is they would acquire Bitcoin and hold it in a custodian in the same way that a traditional private placement fund does, or any other SMA type structure. So they would buy it, they would acquire it from the open market and hold it in a custodian. There's a much more detailed answer, which gets to one of the challenges of launching a Bitcoin ETF, which is how authorized participants who in the ETF structure typically acquire the asset the ETF wants to own can acquire that asset and get it into the custodian. That's not as simple with Bitcoin as it is with, let's say, S&P 500 stocks, where they can just buy them on the public market and transfer them in kind. There are more complications in crypto, and Bitwise and others are trying to work through those complications. But big picture, the answer is the ETF would acquire those assets in a means through the public markets.
And what, 2 more fundamental questions. What would these ETFs cost, and what would be the minimum investment?
Yeah, we don't know what these ETFs will cost yet. No one has published an expense ratio. One way of looking at the competitive landscape is to look at the futures-based ETFs, which tend to charge, I think it's something slightly under 1%. How the minimum investment would be, a fractional share. I mean, depending on your ability of your brokerage account, you can buy fractional shares of ETFs, which allow you to invest, a dollar, a few dollars. It could be a full share, which is likely to be, $25 or $30. But that's what you would be looking at. It really lowers the burden for investors getting in.
Yeah, I think at the end of the day, these are ETFs. The fact that they're buying Bitcoin is kind of irrelevant, just whether they're buying gold or buying oil or buying real estate. They're ETFs and they're going to trade like ETFs. And we know that actively managed and single asset ETFs cost more than the S&P 500 ETFs. So it's not going to be 5 or 10 basis points, but it'll probably be between 50 and 100. And with virtually zero account minimum. It's part of the reason they're going to be so popular. They're more affordable and tradable and liquid and transparent, just like other ETFs, and that makes them gives them attributes that other vehicles don't offer today. So if you like ETFs, you're going to like this as a conduit for your Bitcoin exposure. It's kind of that simple.
That's right.
Gerard is asking if BITW and BITQ are available to individual investors, and if so, how?
Yeah, I think it depends on your brokerage access, but BITQ is just a standard ETF, so it should be available through most, or if not all, traditional brokerage windows. You can buy it in the same way that you would buy SPY, although of course you should review the risks and disclaimers associated with the structure. BITW is more restricted, but it's available in many brokerage windows. And again, I would emphasize that it has unique risks and the ability to trade at premiums and discounts.
We have a reporter among our audience today, and she's asking where the price of Bitcoin will be in 2025. I'll go first, Matt, which might let you off the hook. I have said that between the likelihood of a Bitcoin ETF by then, and the Bitcoin halving, which is occurring in early 2024, and based on the historical results of halvings in the year following halvings, that I am expecting Bitcoin's price to be in the neighborhood of 150,000 by summer of 25. You want to comment, Matt?
I love that answer, Rick. That's a great answer. I'm down with that. I think we're moving to new all-time highs. I think we're in a multi-year bull market. I think we've already entered that multi-year bull market, and I think we will set new all-time highs that are significantly above the previous all-time high, which was 68,000. So your prediction at 150K sounds reasonable to me.
Matthew is asking, what are the disadvantages of Bitcoin? Could it become the Netscape of crypto?
Yeah, great question. I think it's unlikely that Bitcoin is the Netscape of crypto, because for its primary purpose, which is a means to store wealth, it is almost perfectly designed for that purpose and has huge network effect walls. If you were trying to build a better Bitcoin, you would need a way to make it more secure than Bitcoin. And Bitcoin is secured in part from its large economic value. So it's really hard for something to vault over Bitcoin. Again, if what you're trying to do is store wealth, if you're attempting to be digital gold, I think it's going to be very hard to dislodge Bitcoin from that use case. But I would add, as you mentioned earlier, there are many more use cases to crypto and blockchain technology. You can rewire the entire financial ecosystem. You can represent assets in tokenized format. You can do things like decentralized finance or stable coins or NFTs. None of that is likely to be built on Bitcoin. So there is no guarantee Bitcoin will be the most valuable crypto asset. But I don't think it's going to fade in the way that Netscape does. It just occupies one corner of what crypto and blockchain can do. It's a very important corner. I think it's a multi-trillion-dollar market, but it's not the only market. There are these other important assets as well.
The largest fund at the moment is Grayscale's GBDC, the Grayscale Bitcoin Trust. Pete is asking, I'm sorry, rather, John is asking, is it possible for any of these Bitcoin ETFs to become bigger than GBTC?
Yeah, great question. We think the answer to that is yeah. We've said yes. We've said publicly that a spot Bitcoin ETF could attract $55 billion in net flows over its first 5 years on the market. Of course, we could be off by that. It could be 2x that, it could be 1/10 that. But our view of ETF history and of the dynamics in the market says that that's something that's in the ballpark of occurring, and that would make a spot Bitcoin ETF significantly larger than GBTC. For context, the gold bullion ETF market is about $100 billion today. And we think a spot Bitcoin ETF market could eventually get to that size as well.
Pete notes that I, in the past, have recommended a 1% allocation to crypto. Matt, you have advocated in your research low single digits, 2.5% to 5% allocations. Pete's asking if we're still recommending those allocation ranges.
Yeah, I think that's a reasonable allocation based on the historical math in terms of its ability to impact the risk-adjusted return of a portfolio. More than that, and you really start dialing up the risk of your portfolio, below 1%, I think of a lot of advisors wonder if it's worth it for the effort. But I do think that a little can go a long way. So that is, at least historically, a strong place to be.
Yeah, it's kind of interesting. If on the one hand, Bitcoin is currently, just under 30,000, and I'm suggesting in 2 years it'll be 150,000, 5x. Why only 1%? Why aren't we putting 100% of our money there? It's because of the risk-reward ratio. I mean, this is a highly speculative, uncertain asset. There are so many unknowns, regulatory, competitive, technology, sheer market interest, that it's hard to say what is in fact going to happen. And because of 5x potential, in my view, as you just said it best, Matt, that a little goes a long way, that you don't need to have an outsized allocation to have an outsized impact on the portfolio. Now, it's one thing to make a bet, and it's another to be rash. So I think a 1 or 2 or 3% for most folks is more than sufficient. I mean, I'm personally overweighted, but it's not something I would recommend to ordinary folks. I assume, Matt, you're personally overweighted.
I'm significantly overweight, but I would add one other risk that you didn't mention, which I think is the biggest one, which is behavioral risk. The beautiful thing about that small allocation is that you will be able to stomach the significant volatility in Bitcoin. Look, it's the best performing asset in the world over the last 10 years, but to survive that, you had to live through, I think it's 50% plus drawdowns without panicking and selling. You're much more likely to do that if it's a 1, 2, 5% allocation than if it's 50% of your net worth. Right. And the worst thing you can do is panic sell at the wrong time. It's going to be volatile in the future. There's likely to be another 50% drawdown at some point in the future. Size your allocation to make sure that you'll be able to stomach that drawdown so that you can benefit if and when it rebounds and ascends to new all-time highs. And
even if you swear that you can stomach it, you got to make sure your spouse can too.
Exactly.
Avtar is asking that you mentioned starting an SMA business, and he wants to know how folks can establish a Bitwise SMA.
Yeah, absolutely. The SMA is one of the fastest growing corners of our business. I'd encourage you to click that link and reach out to your regional representative who would love to walk you through the strategies that are available, the customization that's available, and how to get that set up. But that is resonating with advisors and growing extremely quickly right now.
And a final question, there are actually several along this theme, which is taxes. How would all this get taxed? It's just an ETF, right?
That's exactly right. And Bitcoin's taxed as property, which means long-term and short-term capital gains. They're corners of crypto where the taxation is complex, but buying and holding Bitcoin is not one of those corners, Rick. It's just taxed as property in most instances. Of course, I'm not a tax advisor, and you should speak to one, but the guidance from the IRS is remarkably clear on Bitcoin itself.
This has been a really fabulous conversation, Matt. We could go on and on. There are so many more questions we haven't had time to deal with. If you have questions that are unanswered, click that link that's in the chat and the Q&A so you can, as Matt said, connect with his colleagues who are able and ready to answer all your questions. And I've got really exciting news. We just announced today that our certificate in blockchain and digital assets is now a FINRA recognized designation. The CBDA designation, certified in blockchain and digital assets. This is the perfect opportunity for you to go get your designation. It's an online self-study course. You can binge it in a weekend. The average person takes 10 days to complete it. You get up to 18 CE credits, and it will give you the knowledge that you need in order to become conversational and fluent so you can answer your client questions, which are going to come in a big way once we get news from the SEC about all the things that are going on in this space right now. So I encourage you to do this. Half the course is all about the tech. What is Bitcoin? What is blockchain? How does it work? The second half is all about practice management, the investment thesis, investment opportunities, crypto taxation, and how to explain all this to your clients. And you can choose from either basic or advanced tracks. We have group discounts available, including a 100% tuition scholarship that's available. And you can learn more and enroll at dacfp.com. And I encourage you to read my Amazon bestseller, The Truth About Crypto, and listen to my daily podcast, The Truth About Your Future with Rick Edelman, which covers not only crypto, but blockchain, and also exponential technologies, longevity, retirement security, and health and wellness. And you can reach me in lots of different ways, whatever you need to get your questions answered in this space. Matt Hougan, CIO of Bitwise Asset Management. Any final thoughts for us, Matt, on what this conversation has meant to everybody?
No, just thanks for having me on. I'm excited to see the interest. I think this is a big event. I think crypto is going mainstream in the next 3 years. This is a signal event in that mainstream evolution, and I'm excited to be along for the ride.
And I encourage you to reach out to Bitwise Asset Management. The link's in the chat box today for you to do that. Matt, thanks so much for joining us today. Really fabulous information. Look forward to talking with you again.
Thanks.
Thanks, everybody, for joining us. Have a great day.